Welcome back to Sonoma Brain Trust. I'm Mary Piasta with Haeuser, Valluzzo, and Piasta, and I'm here with my co-host, Chelsie Runnings of Homes by Chelsie and Daren Blonski of Sonoma Wealth Advisors. And we are committed to bringing you facts over fear on a weekly basis with respect to what's going on in our world. And today we're going to talk about bear flags in the Bear Republic and a little bit of what's going on in real estate. So Daren, can you talk to us about what's been going on in our market with, these election swings that we're facing now?
Until literally 50 minutes ago, I thought that President or Vice President Biden had this election in the bag. And 50 minutes ago, something changed. And I'm going to dig into the markets and show you what's been changing. So I'll start by doing that with showing you a screen here. And what I want to show you is the real gross domestic product. So what is the real gross domestic product? So this is it basically represents all the economic activity in our society. And 50 minutes ago, we printed a surprise up 33.1%. Now, to give you some perspective of how big that print was, this is the line going all the way back to the 50s. This is what happened during COVID. This is what just happened. So significant move up historically. So what does that mean for the election? Well, this is a surprise. It means the economy is very hot right now. It's robust from that perspective. And lo and behold, maybe that's what the market's been telling us, because the market tends to be forward-looking. So what did that do to the market? Well, let's first look at the S&P 500. So the S&P 500 is the largest 500 U.S.-based stocks. And what you see in front of you is something called a candlestick chart. So it's a way we look at how price moves in the markets and helps us understand what the patterns are. So there's two types of general investors. There's fundamentalists and technical people. And so I tend to be more a technical trader and technical investor. I look at the technicals, but also take into account some fundamentals. And so there's this thing called a bear flag. So a bear flag basically looks like a move down to the sideways and then a next move down. So the last few days, we've seen that chart pattern taking place. You can see kind of this move down, slight retracement, move further down, lower low, sideways down, sideways down, sideways down. And look what happened in the last 50 minutes of the market. So these are 10-minute candlesticks you're looking at right here. And in the last 50 minutes, we saw the market really move up. We call this getting a bid. We also call this an inverse head and shoulders pattern, but basically it's signaling a move upward. Now, what's this blue box you're looking at? So what this blue box represents is the statistical likelihood that the incumbent president wins the U.S. election. Okay, so we take the August 3rd value, which is right over here on the chart. So it was more or less 328 on the chart. The market has moved up in August, down in September, back up in October, back down. And we were getting ready to break out of that August 3rd value. Now, historically, if we go back and look at elections and we look at incumbents and whether they win or lose, anytime the market's below its August 3rd value, the incumbent has 100% of the time lost. Okay? Anytime that the market is up higher than 7% from its August 3rd value, the incumbent has 100% of the time won. If it's inside those two areas, 90% of the time the incumbent is won. So what this might be telling us, and it's too early to tell, we still got 9 days to election, so anything can happen. In the last few days when we took these big moves down, it looked like the market was then pricing in a Biden win, a Trump loss. But now with this really significant GDP surprise, the market took off and went to the upside. So will the market be able to sustain the momentum up, keep it in the box, and make it more likely that Trump will win during re-election? Right now, the market, this moment in time, is saying it's likely that Trump still wins, which would then be telegraphing to us that there is, in fact, this sleeper vote out there for Trump that people argue is not there from the polls perspective, right? The polls said, hey, we got it wrong in 2016. We're not going to get it wrong this year. Everyone's saying, no, we think you're still going to get it wrong. The market's telling us, don't think so quick that Trump's going to lose. And that's what we're looking at. So until 50 minutes ago, I was like, the only thing over the past week and a half that I'm like, I don't know. I think Trump might and could possibly still win, because if you look at the betting polls, you look at the polls, they were all saying that he's definitely losing. But the market was saying, no, he might win. And it looked like the market was then going to get in line with the polls and the betting polls or betting odds. And now the market's saying, maybe not. Maybe we think Trump might win. Now, let's go ahead and look over at Real Clear Politics, which is just one place to gather data. I try to be as agnostic as I can about all this stuff. If you look at the battleground states in the Electoral College, so right now, Biden has 232 and Trump has 125, but look at the number of toss-up states, 181. Then if we look over here and we say, okay, well, just did a little update on me. So if we look at Pennsylvania, Florida, Georgia, North Carolina, Arizona, these are battleground states, the margins of error are pretty tight there. So if we have all these issues that we're seeing with counting votes after the election, not counting votes after the election, people mailing in, things getting lost, that's the worst case scenario, right? We want a clean win for the Republic. The greater the better the public is to just get a clean win. The market's saying, no, not happening. We're not, it's too close to call.
And I think what's interesting about this source that you're looking at is that it's differentiating between the Electoral College, which we talked about last week, and also it seems the popular vote in any event. Mm-hmm. So, whether or not this is forecasting something there will be interesting too.
Well, like from last election, I mean, how much do we really care about the popular vote? I mean, Biden can win in a landslide, but if Trump wins the Electoral College, we have 2016 all over again. So
perhaps, but maybe not. We'll see. So now going back to the market, though, what do you think that the market's indicating with respect to stimulus? Like, is this saying that we still need stimulus, or that's sort of, it's acknowledging that that's on the back burner for now?
That would be the argument where I would say maybe that's going to end up on the back burner. So all of these moves, this kind of seesaw effect you see right here we've had over the last few months, this was all very much driven by the fiscal stimulus narrative. So fiscal stimulus, for listeners, is fiscal stimulus coming from Congress, them spending money. Monetary stimulus is the Fed and them allowing money to be spent, more or less. And I mean, what you're seeing now is that if GDP is printing as high as it is, then maybe the economy is doing a lot better than anyone thinks it is. And if it is doing that, then that would be a headwind for getting more fiscal stimulus. So what this is saying is like, look, we've stopped doing fiscal stimulus and the economy just printed a really good Q3. And that's how the market's reacting now. And that's what you see here now with this red candlestick and this green candlestick. That's a very strong indication that support is there. There's buyers in the market ready to go, ready to put money to work. Now they see this GDP print. Its economy's looking good. This could counteract and work against fiscal stimulus because they're saying, look, the economy is a lot healthier than we thought it was.
And speaking of buyers in the market, Chelsie, do you have any updates on what's gone on the last week in our local real estate markets here?
So real estate continues to be a bright spot in the economy across the U.S. in general. Locally, we're not really seeing a slowdown. Prices have come down just a little bit over the last week across Sonoma County as a whole. We saw about a $15,000 price dip, but we're still seeing multiple offers. I looked at a property last week, put an offer in. We had 7 offers up against us in one day of being on the market. I looked in that neighborhood for houses that sold in that area. We're seeing anywhere from 11 to 15 offers on these properties in less than a week of being on the market. So,
wow.
Yeah. The buyer demand is there. The low interest rates are still pushing that buyer demand up. I I've mentioned it before, COVID makes your homes even more important than ever before. So buyers are actually really taking advantage of those low interest rates, but the low inventory is really, it's just an issue, and it's an issue across California in general. But one other good thing that I read today is that fewer homeowners are struggling with mortgage payments. So over the last month, forbearance fell just in the last week alone, almost 6%. So 6% less homes in forbearance. And 41% of COVID-related forbearances have already exited or ended. And also about 6% have already paid off their mortgages, which means they probably sold their house, but we're seeing less homes in forbearance right now, which is huge considering where we were a few months ago.
So Chelsie, I was noticing in the weekly email that you send out for listeners, if you're interested, you could reach out to Chelsie, and I'm sure she'd be glad to send it to you. But she sends out this weekly email that talks about what's sold in the Valley. And I did notice that it was like 98% of asking price was in the last set of transactions. Is that showing softness in the market that people aren't getting asking?
Yeah, we're also seeing more credits going towards the property sales as well. I think 2 weeks ago, we were at about 103% above asking price, and now we're down to 98%. So we are seeing softening a little bit. I'm not really sure why, because we are getting those multiple offers. I had put an offer in last week that I think was incredibly strong, but a buyer from the city came in with all cash and was able to close sooner. So you are seeing these city buyers coming in with cash who can close the deal a bit quicker than people with, a loan. And so they might be willing to take a slower or a lower purchase price to get the deal done quicker. Because loans right now are taking up to 45 days to close just because they are so busy. So we are seeing that homes are taking a little bit longer to sell if there's a loan involved.
Well, and then what's happening with appraisals? Are you seeing that homes are appraising when they are going over value right now?
Yeah, they actually are appraising over value. They are taking a long time to get out there, which is causing problems. I'm doing like 30-day appraisal requests right now. But they actually, I put in an offer a couple weeks ago, and I was actually really concerned because it was quite a bit over asking. But we had no issue with it. They're coming back at the price.
I think that's all really good news for our local economy, showing that, that there's strength in the financial markets as well as the real estate. In the legal world, we're seeing some shifts of business, both in business owners who have decided to close up and get out of their market, but also in new businesses opening, and that's in town. And I've also been hearing from the commercial realtors in town that there are some more deals going through locally and beyond in California, which is, so it's different than the temperature was in weeks prior. So I think it's really good news for our local landscape here. And personally, I'm looking forward to seeing the results of the election locally so we can see what's going to happen with some local things that are on the ballot there. And then, of course, update everyone accordingly when they roll out, if they roll out. So.
Well, it is going to be, I don't know about you all, but I've turned off the news.
I can't seem to commit.
I can't do it. It just drives me bonkers listening to that garbage now. And it's not going to do any good for my blood pressure one way or the other. So I just figure I'll figure out, I'll look at the markets, whatever the markets tell me, price action rules the day, and we'll see what happens.
I think that's a good rule of thumb, or, hey, hope for another power outage and none of us will be watching the news, right?
Yeah, exactly. For some sanity's sake.
Keep sanity, people.
That's
and
right.
Like and subscribe to our channel. So thanks for watching.
Thanks, everybody. Have a great week.